Happy lunch hour, gang. All right. Remember that quote about, 7 or 8 years ago with Barry Soetoro coming out and saying, "What does he have? A magic wand?" When he was referring to Trump berating him over the stellar performance of our GDP, gross domestic product, being around 2%. Yeah, okay. Trump got it up, and then, of course, COVID brought it down. And well, yeah, we're up to that stellar 2% again. GDP numbers came in at 2.1% this morning. Okay. That's, the collection of all the value of goods and services created in the United States. Okay. So, yeah, it's stagnant, basically. Not sustainable. We need 3% GDP to continue to move the country forward. So, all these Jerome Powell's and Janet Yellen's and Joe Biden's and everybody saying the economy is doing great. You know it, I know it. It sucks. Okay. Every time you go to the grocery store, the hardware store, Walmart, Target, put gas in your car, whatever, Bidenomics is a freaking disaster. Okay. Give you this. It ain't as bad as it is everywhere else. This is the thing, okay? You'll hear the talking heads spin the numbers all the time. And I know we're going to get wonky in this one. Sometimes you guys want to hear this, sometimes you don't. But I'm going to try to explain it, okay? About, the dollar's getting stronger and all this sort of stuff. Yeah, that's half the story, okay? It is true that the dollar is at its strongest it's been since last November, in nearly a year. The problem is, what they don't tell you is how that's calculated. Okay. The dollar index is how the dollar compares to a basket of 6 other currencies around the world. The catch is they're all getting weaker, including the dollar, except the yen, the euro, the pound, etc., are getting weaker faster than the dollar is. And so therefore it gives that false impression that the dollar is up. Okay? So I want to give you this. The GDP price index, okay, this is how the GDP relates specifically to the dollar. It's a quarterly number that's reported. Last quarter, it was at 4.1%. Expectations for this quarter that were reported this morning were at 2%. It came in at 1.7%. Now, give you this. This is how this works. A higher than expected reading is a positive for the dollar. A lower than expected reading, which we got, is negative or bearish for the dollar, meaning exactly what I just said. The dollar is getting weaker, but not as fast as the rest of the currencies around the world. So to put this into perspective, the world economy is falling apart. I don't want to use the term collapsing, but the world economy is getting weaker and weaker. I don't care if you go to Australia, go to Japan, go to Great Britain, go to Poland, okay? Everybody is facing economic problems. It's just that Australia, Great Britain, Japan, Poland are facing them at a faster rate than we are. Economies are going to collapse. I will use that term there. It ain't going to be the U.S. economy that collapses first. Okay. Again, I'll reference this one. How did you go bankrupt? First slowly, and then all of a sudden. Okay. And that's kind of what's going on. We're doing one of these until we do one of these. And what we're going to see, as long as this continued globalist green energy, net zero, pick whatever the hell you want to call it, crap goes on, we're going to continue to see economies around the world get weaker and weaker and weaker until they finally fall apart, including China, including Russia, who are seeing the same problems, okay? Their economies are getting weaker and weaker and weaker and weaker. Eventually, they will drag down the U.S. economy. That's what's going to happen. Imagine a bunch of little marbles on a string and a big marble at the end. Okay? Maybe they balance each other out, but as those little marbles start to tip like this a little bit, eventually they pull the big marble over the top of the apex. That's what's going on. This is why we talk all the time about getting bills paid, saving cash, doing whatever. It's why we talk a lot about gold and silver too. Okay. Now, if you guys have been paying attention to what's been going on in the gold and silver markets, they've been getting crushed this week. All right, down. I think gold was down $25 an ounce on Tuesday. It was down $25 an ounce on Wednesday. It's kind of bounced around a little bit this morning, right around zero, maybe up $1 or $2, down $1 or $2. I'm recording this about 10 o'clock, so you'll see this in a couple hours. Things may have changed, but looking at what is going on in the gold market, look, and I'm going to try again, wonky. Try to explain this to you. The difference between technical analysis and fundamental analysis on any sort of investment. Okay, fundamental analysis is looking at a company's earnings, what their future sales would be, all that sort of stuff. Okay, what's actively done, and that is how an analyst will come up with a price target. Hey, the company's rolling out the new iPhone or new tablet or whatever it would be. We expect sales to be this, the profit margin be this, therefore that would bring the stock up here. That's fundamental analysis. Very, very basic way of explaining it. The problem, you can't look at gold and silver like that because gold and silver doesn't have earnings. It doesn't come up with new products or anything like that. Gold and silver is gold and silver, the end, right? So the only way that you can really try to gauge where the price of gold and silver may go in the near, intermediate, and long term is looking at technical analysis. Okay, and technical analysis is looking at charts. Okay, what historical prices are, talking to companies, traders, countries, whatever it would be, and figuring out what the trend is for gold and silver. And this is where you hear terms like support and resistance. Support means is where the bottom should be. Resistance is where the top should be. Yes, things can break support. Yes, things can break resistance. Okay, but this is where word on the street, if you want to use that term, is what's going on. The big question that rolls along with gold, and we've all seen this story for a couple of years now, is that countries are buying gold up like crazy. Except the United States, of course, because the people running our economy aren't smart enough, okay? But China, Russia, India, Japan, whatever, everybody is buying gold. Well, here's the question. If everybody's buying gold, why isn't the price going up? Again, if there's more demand than there is supply, that brings the price up. So you would think that there's a lot more gold being mined. But there isn't. There's more gold being bought on the open market than there is being mined and put into the open market. So where's the problem there? Well, do we have another one of these situations where they're flooding the market with paper gold and paper silver, right? Okay, promissory notes. This piece of paper entitles you to 1 ounce of gold. Yippee, it's a piece of paper. Okay. This again goes into why we all say, preppers, hold it physically. If you don't hold it, you don't own it. Okay. The countries, Japan, Russia, China, whatever, are not buying promissory notes on gold. They're taking delivery of the actual physical gold, just like you and I should. Okay. Or those of us that do participate in the precious metals markets do. Okay. I get this question lately, where I buy my gold, where I buy my silver. I got it again this morning. You got to shop around. I've mentioned this. I use JM Bullion, I use SD Bullion, and I use BGASC, okay, all online. Compare the prices there, see what sales are, who's got deals on premiums. That's for those of you that ask. That's what I'm letting you know. Okay. So, what is the technical analysis of gold? What does the future see? Okay. And we were looking over this last night. Long term, which means more than a year, gold is at its long term support level. Does that mean it could break it? Yes. If we go even out further, gold could drop down to somewhere around about 1825. Right now, as I'm recording this, gold's at an 1872 bid. Okay. Remember, it wasn't April that we were seeing 2,000 on gold. So yeah, you've seen about a 6%, 7% drop in the price of gold. Does that mean, oh my God, panic and get out? No. Okay. It's what I've said many times before. If you're looking at it, stuff's on sale right now. Maybe you go buy some. Okay. You're not trying to get rich off of gold or anything. You're trying to protect yourself. You've heard all these stories many times about you could buy a excellent quality men's suit in 1920 for 1 ounce of gold. Yeah, you could. Back then, 1 ounce of gold was about $25. You buy a great suit, Now 1 ounce of gold is $1,872. Buy a great suit with 1 ounce of gold. Same thing. And everybody that's saying, oh, gold's going to 50,000 or whatever, maybe it was silver. They said it's going to 50,000. I don't know. But if gold goes up to 50,000, okay, which is, to make math easy, 25 times from here, right? What you're protecting yourself from is when gas costs you $75 a gallon, okay? Because just holding the cash, you got $100 in your wallet right now. $100 right now will buy you about 30 gallons of gas. $100 if gold goes up to 50,000 buys you what? A gallon and a quarter of gas? That's it. But if you had the 1 ounce of gold that you buy today at 1872 and gold goes to 50,000, okay, you can still buy the 33 gallons of gas. That's what you're trying to do with gold. You are trying to protect what you currently have. Sure, it looks like, oh my God, I've got $1 million because I have, 20 ounces of gold or something like that. Great, okay. But what does $1 million buy? That's the big question that people try to answer all the time. Gold is not to get you rich. Gold is to avoid getting you poor. That's what you're trying to do. Gold is for wealth protection. And as we see that when the dollar index is starting to go down and the dollar gets weaker and weaker and weaker, and all those little marbles pull the big ball over the apex, that's when you're going to see the dollar crash, and gold and silver should, key word there, should go up. But many of you remember going back to the late 70s, early 80s, the manipulation of the silver market. Don't be surprised if there's more manipulation of the gold market now too. If you do, now might be a good time to add a little bit to the gold stack or the silver stack, either way. Okay. Not giving you financial advice. I'm just telling you what is going on right now. You make the decisions on this and like everything else that fit your situation. Have a good afternoon.